Hey guys, what's going on? I want to break down the past week of trading and what trades I got in, my entries and exits, and what you can learn from it. All right. So before we go any further, let's just break down the trades. So keeping one thing in mind. So I'm starting this recap from September 1st, which is a Friday. Now the following Monday, it was Labor Day, so the market was closed. Tuesday, Wednesday, and Thursday, I traded. And Friday, I decided to take a break. All right. So I'm on a 4-day winning streak again. To me, I always say I always say that win rate is very irrelevant, right? Even if you have a high win rate, it doesn't mean that you'll be successful. There are hedge funds out there and many traders who have a 20% win rate and they still end up making money, right? So the main thing is to focus not on win rate, but focusing on how much you win versus your right versus how much you lose when you're wrong. So if you can minimize your losses and at least make double your losses, that'll be good. So on average, let's look at like an options contract. So let's just say on average, you lose 8%, right? So my goal always is to keep my losses around 8 to 10%. If you can win double this, which happens to be 16%, you have a 2-to-1 reward risk ratio. And even if you have a win rate of 50%, which is not that good, you can still be successful. All right. So I want to show you my trade zealot stats from January. Now, during this time, I was over trading on purpose. Look how many trades I took because I was trying to backtest new strategies. But what you can notice here, guys, again, I'm going to go over the trades I took, but I just want this to etch in your mind, is that I had a 55% win rate. All right. I won 55 out of 100 trades. But despite that, despite having a lower win rate, look at how many days I won. I won 80% of the days. So in January, I traded around 20 times, 20 trading days, and I won 16 out of 20 trading days. So out of a 5-day trading week, I won 4 times and I would lose once, which is pretty good in my opinion, despite having a lower win rate. So again, don't focus on win rate. If somebody's advertising that they have a 90% win rate, that doesn't mean they're a good trader. What that means is that if they are in a contract, they buy a contract for $100, they could have a take profit, let's just say of 102, barely anything. All right. When I trade, as you guys can see right here, if we look at the averages, I had 4 winners and 1 loss. My only loss was around 6%. And the other 4 winners, they averaged, again, some were higher, some were lower. They averaged altogether about 18 to 19%, which is triple the amount that I lost. So again, 4 winners, 1 loss, 1 loser. And even if I had 4 winners and 4 losers, I would still be up, right? Because as long as I can make 2 times what I'm averaging, what I'm losing on average, I'll be golden. So my goal again is to keep my losses under, 8 to 10%. And again, just so you guys know, I'm trying to look for some type of breakout and break and retest of supportive resistances. So if again, let's just say a resistance is pre-market high on Tesla, it breaks, I want to break and a retest. So for calls, I'm looking at something like this. It breaks that resistance, and then I see a bottom wick, because remember, bottom wick shows urgency of the buyers, and then I end up getting in this candle. Similar to that, I want to see the stock break and retest towards the short side. So this is NVIDIA, breaks low of the day. I'm waiting for the retract. Next candle opens up, a top wick forms, and this confirms that these sellers are strong. Again, this is going to give us confirmation once we see those bottom or top wicks. So this left side is what I look for calls. Right side is for puts. And again, I'm looking at a bunch of other different things, and this is just one strategy I use. So again, let's break those trades down now. All right, so let's start off with Friday, September the 1st. So what happened on the video is interesting. So again, if you want to live trade with me every day, if you want to see me chart in real time, trade in real time, give my guidance, entries, and exits, make sure to join my Discord, okay? So again, when I send the Zoom link out every morning, you'll be able to see my charts like this, and I'm charting, I'm giving guidance, entries, and exits as if like how you're watching it right now. This is what you're going to see when you join my Zoom live stream, which is included in the Discord, all right? So the first trade was NVIDIA, and this was September the 1st. So what happened right here on NVIDIA is, as you can see, that it breaks the support right here. And as you can see, just so you guys have clarification, this is yesterday's high, which happens to be a support now, all right, because it breaks that. So it breaks that support, which is yesterday's high on September the 1st. And notice one thing, it goes down within the first minute, it retracts back up, it ends up rejecting VWAP in those multiple EMAs. So like I mentioned before, whenever you see a reject, now again, breaks, goes up, rejects this area, this shows you that the sellers are pretty strong, because if the buyers are really strong, they would have been able to push past high of the days. Unable to break high of the day, goes up, retracts. It's holding kind of like an H format if you kind of look at it closely, and end up coming back down low. Now, I could have gone in right here, but I saw that a nearby support, which is prior day close, was there. So I wanted to see how the stock reacted. Now, during this time, the video is doing was going down much more than any other stock. So this is why I focused on it as well. So again, I like to compare, contrast what stocks are doing. So for example, if NVIDIA is doing something that's completely different than any other stocks and index ETFs, it's an outlier to me, right? And I want to focus on it. So in this situation, again, breaks, retracts up, rejects VWAP, confirming sellers are strong. So this prior day close, which is now support, is nearby. And as you can see, this candle right here, this means that in this point of time, this used to be a slide of a green candle, but immediately sellers came in. They turned that slide of a green candle into a slight top wick before the minute closed. And as it was dumping down, this is the moment I start to get in. Again, I had a couple of clues in advance. It broke a support, retracted back up, rejected VWAP, comes to another support, and a slide of a top wick, and I ended up getting into this trade a little bit quicker than I normally would have. I would have most likely, this broke, then this came in, and then perhaps I could have gotten in. But again, every trade is going to be different. Trading is not a science. Every trade is going to be a little bit different. You might deviate from the plan. Sometimes it might be based off of chart time and instinct that you get into a trade. But in this situation right here, breaks prior day close. It's that same minute that top wick came in, I ended up getting this candle. Very tight stop loss. I would have gotten out at this level right here. This was my stop loss. The top wick of that candle. Okay. So I ended up scaling out in this position. I took some out at 10 and 20%. And my last runner, so this was at I believe 20%, 15, 20%. And my last, my last runners were at 50%. But notice one thing, as the stock was going in my position, this is a green line now is pre-market low. I told my Discord members, and again, if you guys are watching, you guys remember, I said I update my stop loss now. So again, generally my stop loss is going to be this line right here, but now I updated. And I said, if it breaks above this green line, which is the pre-market low, I'm going to get out this trade. So again, I exited a good chunk of my position here. And even if the stock retracted back upwards and I sold it here, I would have still been up. Now, this was my updated stop loss because this is a support, now turned resistance, the pre-market low. And I noticed that I kept top wicking off that pre-market low. And I said to myself, wow, the sellers are still in control. I ended up holding it, retracted back down, and I ended up selling my last position here for almost 50%. Now, this was on a Friday, and I did not trade that same week contracts, which we call 0 days to expiration. I traded the next week contract, the next Friday contracts. So again, if I was trading 0 days to expiration, I probably would have made 100 to 200%. But I didn't want to trade that because 0 days till expiration are way too risky, in my opinion. So this was a decent trade. So this was on Friday. On these runners, we made 50%. But again, I was scaling out. So the average is a little bit above 25%. So Monday, the market was closed. It was a Labor Day. Back at it at Tuesday at my Discord. So this was what we traded on Tuesday. So again, you won't see it because I'm not showing you in real time, but I was when I was live trading it. So at this point in time, I was looking at different stocks. I generally trade SPY, Tesla, and NVIDIA. And the first candle on Tesla ends up breaking this light blue line again, which is the prior day close, a very important support or resistance that we use. At the same time, the video was going down and SPY was a bit indecisive at a choppy candle. But Tesla seemed to have strong buyers right here. So I said, this doesn't mean I get in. What I'm really looking for is the confirmation. So I want to see a break. I want to see something that confirms that the buyers are strong. And I had one of my shorter time EMAs right here, this light blue line. So again, Tesla breaks prior day close. I'm staying patient. Second minute occurs, bottom wicks off of that EMA that I love to use. And then I told my chat, I said again, when it breaks this high right here, I'm going to get in. What ended up happening, a bottom wick formed again. So this at point in time was a red candle. Before the minute closed, it turned into a bottom wick. I mean, buyers pushed. When they pushed, this candle went from red to green. I ended up getting in around here. Now, along the way, again, I scaled out. So I'm at 20%. So I'm at 15, but my last exit was this end of the candle. So when this candle closed, this top wick came, and this candle closed, I got out of position for around, these last runners went for 50%. All right. But again, I was scaling out the way, I was scaling along the line. So the average was a little over 25%. Now I ended up getting out here because two reasons. First of all, a top wick form. So a top wick generally indicates that sellers are going to step in. Doesn't necessarily mean it's going to occur, but strong likelihood that sellers are going to start stepping in. So I decided that I'm going to sell the position because these last runners, basically, this is within market open 9:30. I exit the last candle within 7 minutes of trading. I exit that last candle for 50%. So I said I made 50% of these last runners within 7 minutes. Why do I want to continue to hold? Let's not be greedy, and I exited out the trade. All right. And then the next day, traded Tesla puts. So again, I'm not having a bias. I don't care what the market does on Monday or Tuesday. When it will not make me have a bias. So every day I open up with a clear mind. I don't know which direction the market is going to go, but I do have a plan put in place. So regardless which direction the market goes, I am ready. All right. So in this situation with Tesla, which I traded Tesla puts, this wasn't really a huge trade. I think this is that the most was around 15% on these. All right. So again, what happens? Tesla is more bearish than most. It breaks the pre-market low, right? This is the pre-market low. This green line breaks pre-market low right here. And again, I was waiting for some type of retractment. Now, I was a little bit quick in this trade, but what ended up happening is it broke pre-market low. It was more bearish than any other stock. All right. So again, I like to compare and contrast the price action at the opening of many stocks. And Tesla happened to be going lower than the majority of every other stock, especially index ETFs. It breaks the pre-market low within 4 minutes. So I was waiting for the confirmation. Once I saw that top wick coming in, right, it didn't go exactly upwards towards that pre-market low like I wanted to, but it did indeed wick off of that EMA I love. So I ended up buying puts right here with a very tight stop. So stock was going in my direction, but what I noticed, although it was kind of wicking off of that blue line, light blue line, which is the EMA, one thing I didn't like about this trade is that look at these candles. These to some degree are indecision candle. And what I mean by that is that when I'm buying puts, I like to see the stock go down with velocity. So what is velocity? So instead of seeing these type of candles, I would have preferred to see this type of candle, or this type of candle, or this type of candle, or these type full red candles. But as you can see right here, these are slight indecision candles and they're getting smaller and smaller. So this is why I said a majority I was out around here. Once I noticed that the stock is slightly stagnating, right? Anytime I like to trade, I like to see the stock moving in my direction very clearly with velocity, meaning it's able to push lower and lower. When I see it stagnating slightly right here, I ended up exiting majority out of my positions, or I believe it was around 15%, right? And I ended up retracting back up and ended up coming back down. And again, hindsight's 2020. But the reason again is that it was having many indecision candles. And I thought to myself that this was showing me clues that perhaps the sellers are drying up. So I ended up taking majority out at 15%. Like I always say, some days it's going to be base hits. Some days you might have some home runs. But in the collateral, when you average everything down together, it should be fine. But again, don't expect to have home runs each and every day. The analogy that I use is that if I'm a boxer, I'm not looking to knock out my opponent in a single day or in a single minute, right? Because I'm going to end up getting knocked out myself. I need to jab, I need to punch a little, and then set myself up for that knockout punch, right? So again, not every day is going to be a home run, but be happy that you have an opportunity to trade, and you just need to make sure that you maximize your winners when you're right and minimize your losers when you're wrong. All right, sounds good. And last but not least, let's go over Thursday's price action. So I took 2 trades on this day. So this is the first trade. This is the only loss that I had. And this loss was very, very quick. I was out very quick. So again, what ended up happening was Thursday. Thursday, we started seeing Tesla coming down, right? This green line, like I always mentioned to you guys, just so you have a reference, is going to be that pre-market low. So it touches pre-market low. Buyers are stepping in. Slight bottom wicks. Ends up breaking the orange line, which also happens to be yesterday's low, and also breaks the high of the day, which happens to almost be the same line. Again, I did not get into this trade because I wanted to see some type of confirmation by the buyers. I wanted to see some type of wick, some type of bottom wick. A bottom wick did come, but it wasn't as large as I was expecting to. And perhaps I could have gotten in, but again, hindsight's 2020. I wanted a larger bottom wick with some type of confirmation. Again, you can get in. There's times when I instantly get into the trade, and sometimes when I just wait for the retest. Now, if you wait for the retest, again, you're gonna have less fake outs. If you go for the breakouts, again, as soon as it breaks resistance, you're going to have higher probability of getting faked out. So again, sometimes I might get in as soon as it breaks out, but for the most part now, I really do wait for the retest. And again, sometimes it might be instinct as well. Just looking at the charts, it gives you some type of instinct as well. So again, the slight bottom wick ends up going up. Now at this point, it's bullish, goes up again. I got a little bit late in this trade. I ended up getting in around this point in time. When it broke right here, when it broke this high, I ended up getting in here. Now, second candle, slight bottom wick, right? Comes back here. Now, this is why I exited out. I ended up exiting out right around here, if you guys remember. My Discord members know. So my entry was here, and within 2 minutes, I made a decision that I wanted to exit the trade, all right? So again, if you look at the overall picture, I was actually completely right. The stock ended up completely tanking, but I ended up exiting it, right? Because it wasn't going majority in my direction. And I decided just to exit this trade. Again, I lost less than 6%. This was on a Thursday, and I did not trade that same week expiration on Friday. No, when it's a Thursday or Friday, I'll opt to get the next week contract, not the same week, the next week. So again, this is why I lost less than 6% in this trade. Entry was here, exit was here. So very quick, I'm very quick to exit that trade if it's not going in my direction, if it's not going velocity, if it's not going up like that, I'm going to exit the trade. So that was around, excuse me, was around 9:41. This is where I'm different than anyone. I said I'm not going to force myself to get into a trade. What I ended up doing is I stayed patient. Now, this is something that I realized that you need to stay patient sometimes. Like if I want to be a fisherman, I need to wait at my location and wait for the fish to come to me. If I try to jump into the ocean or to the lake looking for the fish, I'm end up not catching any fish at all. So you have to be very patient, all right? Let the trade come to you. Don't rush the trade, let it come to you. So I took that small loss, 6% on Tesla on a Thursday. And again, this is the same day. This is on Thursday. That was at 9:40s. I ended up not taking a trade until 10:45. So I was on my screen for almost an hour plus, just waiting for the right opportunity. And this is what I saw. Again, if you join the Discord, this is what you're exactly going to see, me trading in real time with everything very clear, entries and exits. Okay. So I noticed that, again, if you look right here, SPY, again, index ETF, majority of stocks actually follow the direction of major ETFs, generally speaking. So again, breaks high, comes back down, it ends up bouncing off of the low of the day area, bounces up, it's unable to make a higher high, it comes back, touches the low of the day, and it's not able to make a lower low. Now, that being said, this, in my mind, tells me that the market right now is not a breakout market. This is, in a sense, a reversal market because it makes a higher high, and every time it goes to low of the days, it keeps bouncing back up, okay? So again, the stock is unable, if you look right here, it made a high right here, comes back down, low of the day bounce, it comes back upwards to this resistance right here, and is unable to make a higher high at this point in time. If you see right here, just draw this off for you, it's not able to break it, and this is around 10 o'clock. So remember, the most volume is within the first 45 minutes. So within the first 45 minutes, breaks up, but it's not able to break and make higher highs within the first 35 minutes, 45 minutes, all right? And again, it keeps reversing off of low of the day. So I know right now that we are not in a breakout market. We are in a reversal market, meaning there's a higher probability that every time it touches low of the days or higher of the days, that we are going to reverse backwards. So it's going to look like a pinball going upwards to high of the day, then coming back to low of the day, then upwards high of the day. So this is not a breakout market. So again, I noticed this, that I kept reversing. So now my eye was on it when it was approaching this period of time around 10:45. So again, my thesis again is that the whole day the market has been in a slight range, as you can see right here. If this market was going upwards, if I zoom this out, right, the market should have looked like something like this. Let me just draw a little bit. It would have opened up right here. Even if it retracted, it should have been like this. This would have been optimal. All all right, if we were looking to long. But notice it's not able to do that. It's actually been in a range. So that actually makes me think, okay, let me try to play the reversal. And again, reversal basically means that once it goes to high of the day, it's probably going to not break out and continue to go in that direction, but rather it's going to reverse and continue to go back down. All right. So again, keep one thing in mind, that it's unable to make a higher high at 10 o'clock. So from 9:30 to 10 is the most volume, most volatility. All right. So if the buyers aren't aggressively able to bid it up above the high of the days, my mind was, what makes me think that they're able to bid it up at 10:45, right? Because again, after 10 o'clock, there's a very low volume, after 10:15 especially. So again, the first 30 minutes has the most volume. The buyers aren't able to bid it up. And it's been ranging the whole day, right? It's been bouncing off of high of the day, low of the day. So this isn't a range bound. So we want to play the reversal. So again, if it's not able to break high of the days, this should have broken right here. If the buyers are really strong, it's very less likely that at 10:45 now the buyers are going to magically appear out of a sudden and start bidding the stock aggressively up at 10:45, when in fact they would have been done that around 10 o'clock. Again, so that was my thesis slightly, but to confirm my thesis, I needed to wait for some confirmation. And this is what the confirmation was. As soon as it touched the high of the day, which I charted, again, live on Discord, a top wick formed. Now, when that top wick formed, guys, what did I do? I did not get in here yet. What I like to do when I play a reject basically means you want to short the stock by buying puts. I wanted to wait for it to reject and slightly retest that top wick. All right, that's how I actually confirm that this stock is going to reverse. Again, sometimes you can get in as soon as you see that top reject. So a lot of times you might buy puts as soon as you see that top wick off a high of the day. But for me, I wanted to wait for it to retest, meaning top wick came in at the high of the day mark, but I wanted to see if it, once it came back up here, I wanted to see what occurred as soon as it touched that top wick. Did I see a slight top wick again? And as you can see, a slight top wick did form, not as intensive as this time, but it did indeed form. And then the next candle opened up. This candle was green. Green turned to red. That's why there's a little slight top wick. And at this point in time, this is exactly where I got in the trade. So my entry was 444.63. And my stop loss, guys, was literally under 5 pennies. It was the high of the previous candle. So if this trade went against me, I was only risking 5 cents, which is 5 pennies. Again, in options, that's a little bit different, but just showing you for example purposes. In this situation right here, I was spot on, end up rejecting, coming back downwards, coming down, rejecting, and majority of my position, I ended up exiting out right around here. Now, in this situation right here, if I was trading 0 days to expiration, I probably would have made 50%. But I, sorry, not, yeah, I mean 0 days to expiration, because again, SPY has expiration dates for every day. I would have made probably more than 50%, but that's not my way of trading, right? A little bit more conservative. So I had 2 days to expiration. I ended up making around 12 to 14% on this trade, and majority of it, I was out right here. And again, I was done for the day. And that's basically it. That's a trade recap from the Discord. So again, if any questions, send me a message. Make sure to join the Discord if you have not already done so. All right, guys? So I'll see you later.